Okay guys, welcome back to the channel. Thanks for tuning into today's video. I hope everyone's having a fantastic day. We've got a lot to talk about today, and if you've been keeping up to date with the charts, up to date with the economy, you would have noticed that Bitcoin saw a huge drop. We saw a massive drop once we lost 19,000 all the way, a nearly $400 drop down to 18,650. The traditional markets saw slumps across the board pre-market on both the Dow Jones and S&P 500. We saw the DXY push very high over 11.3.5, as well as the 2 and 10-year government bonds pushing up to record high yield rates in the last few years. So it was looking very grim. We saw a very grim period of time in the markets, but it soon reverted. We're going to talk about the revert. We're going to talk about that rally back upwards that basically wiped out all of those losses and cleared those lows, cleared those local highs, and pushed to even highs. We're going to talk about that today, but before we get into it, guys, head down to the pinned comment, click the link, join our Telegram channel, get access to all the updates, analysis videos, information, and so much more over here. Everything you need to stay in tune with the market, understand what's going on, and keep up to date with the economy. We post only the relevant information here. We don't spam post. We post what is needed and when it's needed. If you go ahead and head down, you can actually comment on this poll here. And the poll is about a new series I'm considering starting called The Psychology of Trading. And this will be posted on YouTube. It's going to be comprised of very niche topics such as trading anxiety, controlling emotions, fear and greed, all these different psychological triggers and different concepts in about 5 to 10 minute podcast type episodes on YouTube. Let me know if you want to see it. We'll go ahead and get that started hopefully on the weekends. Let's get into today's video. So we've already talked about this huge crash. And it was a huge crash. And percentage-wise, we've seen bigger drops. We have seen bigger drops percentage-wise than this, but the reason why this was such an important, or should I say, big crash, was because of the position or location of which it dropped below. And we lost that 19,000. We lost this horizontal support between 18,900, 18,900, 18,950. This very small support range we held, and we crashed all the way 2% down to 18,653. And this is a very important level to hold. As you can see, over the last few months, we have retested this level, particularly numerous times, guys. We've retested this so many times now, and this really was that last line of support for Bitcoin. If we take a look at the total cryptocurrency market cap, we actually saw the total cryptocurrency market cap dip into what we called the danger zone. And we talked about the danger zone in yesterday's video. We actually dipped back into the danger zone. So we can say without a doubt, the market was looking very bearish. It was looking not only bearish, but it was looking very scary. It needed a miracle to bounce up from there. It needed something to happen fast, and thankfully, or luckily, or whatever you want to call it, it happened. We saw that, and I don't think this is particularly a good thing, but I think we need to be aware of it and talk about it. So let's jump into it. Why did the market push upwards? Why did we bounce so aggressively after such a huge crash? Well, let's take a look at the DXY. The DXY was in a bull flag. We broke to the upside. We cleared this local top here. As you can see, here's a resistance, here's a resistance, here's support. All right, we have this support line. We have this resistance line. We pushed through here all the way up to about 114 and got heavily rejected. We're talking about a 2% drop on DXY, heavily rejected. We saw, again, the 10-year government bonds push up to record highs over here, 4.33% on the yields. The 2 years up to 4.64 on the yields, both crashing down after. S&P 500, we saw that nasty drop over here and almost fully recovered that drop and actually cleared these previous highs, which is really nice to see, of course, for the bulls. And of course, if we look at the S&P 500, so as the Dow Jones S&P 500, we're seeing that local high being retested after what we would see a very brutal drop down. Now, the reason this happened was actually because of this. And you're probably thinking, how can one piece of news article impact the market so much? And we did talk about the market as a whole yesterday in terms of the sensitivity to news right now. And the reason why the market is so sensitive right now to news is a combination of massively reduced volatility across the board. Particularly in cryptocurrency, we have very record low volatility right now. Volatility has been this low 4 times in the last 7 years. We have a very tight range in terms of price action in swings over the last few months is a very small range, okay? And we have to factor in the fact of where Bitcoin is structurally in terms of price action. We are essentially coming up to the apex, if I go ahead and zoom out, of a very, very long, 140-day long descending triangle. We're coming up to the apex, and the closer and closer we get to the apex, the tighter this range becomes. Now we have to combine the fact that we know the Fed's rate is coming soon, the interest rate is coming soon, hike. So people are in anticipation, potentially fear, potentially deer in the headlight, waiting for that news. And then we have to consider the amount of money that is currently in future trading, getting liquidated, day and left and right, positions being open and closed left and right, which is heavily, influencing the sporadicness of the price action in terms of, how consistent it remains within these support and resistance levels. So a little bit of news is massively shifting the market sentiment right now, and therefore massively shifting the way the price action is occurring, and it's making it a little bit more sporadic. That's why we're seeing these long drawn out areas of consolidation, followed by these rapid 20-minute drops, 15-minute drops, like here, very short lived. Look at 10 minutes. We're looking at 5 minutes. We're looking at 5 minutes over here. We've got this massive drawn out consolidation periods by these heavy drops, and that is kind of what we're expecting and what we're seeing here. But nevertheless, this individual piece of news by the Wall Street Journal basically saved the market yesterday. They released this news just after that huge crash. It was prior to the market opening. It was about 20 minutes before the markets opened, just after that huge crash. And obviously what they said was the Fed set to raise rates by 0.5 basis points. And here's the important thing: debate size of future hikes. Now, like we said before, the market moves on perceived systematic risk. The moment the market sees any inkling of pivot, it doesn't necessarily need to have a bottom, it just needs to see an inkling of pivot. We will see the trend reverse, and this is exactly what has happened. Now, here is the thing. We can't be 100% sure if what they are saying is correct. And the reason being is this is not a verified source. This is not the Fed, this is the Wall Street Journal. Essentially, they can say what they want and the Fed needs to comment on it. The problem is the Fed is not speaking again until the 2nd of November. So it's a 10-day period where this news article can now potentially positively impact the prices of these assets moving forward to the Fed meeting, which naturally, and which it looked like in the charts, we weren't going to have a very positive weeks leading up to that hike. So this has massively influenced the market, massively shaped the way the market risk is perceived, and completely reverted these losses we saw from that huge crash yesterday. So very interesting. And a lot of people are saying, I hate manipulation, I'm so sick of manipulation. Here's another thing, guys. Manipulation happens always. There is always manipulation. Do you think that 2021 rally for crypto and stocks was natural? No. That rally was heavily manipulated, okay? The problem is you don't look at manipulation when it is in favor of your positions. When you are benefiting from the manipulation, you turn a blind eye. It is only when it starts to damage your profits, when it starts to damage your positions, that is when you start paying more attention. So we cannot say this is abnormal. Manipulation always occurs. We have to be aware, guys, the Federal Reserve, the Wall Street Journal, these big finance articles, media outlets, they are always manipulating the price of assets. Absolutely always. It is a natural occurrence in the markets. They say they don't, but they do. There's nothing we can do. If you've got influence and you say something, you always have manipulation. Take a big YouTuber, for example. Let's just take Crypto. If he said he likes the look of a particular altcoin, what do you think that altcoin is going to do? It's going to rally in price. And that doesn't mean he's purposely manipulating it, but he has to be aware that due to his reach, due to his audience, saying things like that can in turn manipulate the price. And that is why if you have a big channel, that is why if you're a big media outlet, you should be more aware and cautious of things you say. And I believe this article here was intentionally designed and intentionally worded to give the market some relief and potentially save some of their friends and buddies who are big in the market and are potentially down bad from that drop, and give everyone a lifeline. So be aware, guys, be safe, and obviously keep in mind that this recent pump, is very artificial and will most likely continue because of the market sentiment. But let's take a look at the technicals and talk about this. And we'll talk about the DXY, total cryptocurrency market cap, we just went over. This is the Bitcoin chart, of course, and we have a look at the SP500 here. It looks like it is actually breaking out of this resistance over here. Almost looks like we have some sort of inverted head and shoulder pattern, which is obviously very bullish. And obviously our next resistance level is up over here. If we do continue upwards, I would expect this to continue upwards to this range here, which is about 3,220 to 3,950. Sorry, 3,920 to 3,950. Would that be that next major resistance level, as we can see in the charts, if we do push through this level? And of course, to get that confirmation, we will need to clear this level here, which is 3,813. Taking a look at Bitcoin, guys, and we'll go to the short-term time frame. On the short-term time frame, it's not looking, this is the thing, like I said, it's not actually technically looking good, but we are not dropping because there is so much certainty right now that the prices will continue due to that news release. If we take a look at the charts over here, we can draw in some very, very clear trend lines. We obviously have a very clear pennant formation here, which we just fake out and drop down from, rejected twice, and we haven't even dropped from here. We're just pushing sideways, going from this pattern out of this pattern, developing a new pattern, which is obviously very indicative of a lot of strength in the market right now. If we go ahead and bring up some of these indicators and go to a larger time frame, we'll go to a 30-minute chart. We can see a lot of strength over here. We blasted through a bull market support band. We're back in that bull market support band, potentially pushing back upwards again. Would like to see a red candle and push back down. I think naturally we would like to see a reversal point here. I'd really like to see the price come back down, probably retest these lows, 19,000 level. I do not like to see these pump and dumps occur. You may be thinking this is good, we're bullish, but it's not good to see these massive swings occur when we know these swings are caused by manipulated news or manipulation in general. What I would still like to make sure you guys are aware of, we are still very much under this trend line. And until we break out of this trend line, you have to be very cautious of these swings, because we're seen within this range already. And we're not going to see this change until we break this trend, these big swings. Take a look at this price action, guys. I'm going to zoom out. Since the start of October, and here it is, start of October, this is a 21-day period, okay, 21-day period. We've had numerous 7% swings, 4% up, 4% down, back down, 2%, back up, 3%. We're back up and down in this massive sideways chop zone. But guess what? We're in exactly the same price point we were at the start of October. We haven't moved. We have just chopped sideways with these big news-related swings. It's very important to remain calm, objective, and realize that if you are interested in buying Bitcoin for the long term, buying at a 1% price discount or buying 1% higher or 2% higher isn't going to make a difference in the long term. Better to wait for confirmation, guys. Better wait for confirmation. So what am I doing right now? I'm not interested in trading a lot right now, personally. I'm going to wait to see what happens here. I think we head back down on the short term. I would really like to see a rally back down to this level. That is what I think is going to happen. That is what I think will occur. Usually when we see these scam pumps these scam dumps followed by a scam pump, scam moves generally are short-lived. They don't sustain generally, particularly in the scenario when this scam rally has actually not resulted in anything significant. We didn't even clear this previous high in the 4-hour. We haven't even broken through its resistance. We barely made it very high, if we're being honest, in terms of the chart. We didn't even make it. We didn't even get back over 19,200, which is a key resistance level. So I would like to see us reject back down to 19,000 and see if we can find some actual support there, moving into a potential breakout or even a rally back down here, something like that. But like I said already, guys, in yesterday's video, the key date is that 2nd of November. We really are waiting now for the 2nd of November, and the higher the prices go before the 2nd of November, the worse the risk-reward ratio becomes upon that Fed news release. Remember, if the prices go too high and the Fed come out, they're going to pump those interest rates up, okay? If the DXY drops too much before the 2nd of November, the Fed will most likely be more inclined to raise those rates. And that is why I was really hoping for the prices to remain quite low and stay sideways, stay above 18,400 before the 2nd of November, before we had that news release, as we would be more likely to see that 0.5 basis point hike, which actually could see some relief in the market. Anyway guys, that is it for today's video. I hope you guys had a little bit of an understanding from that video, gave you a little update on what's going on. Obviously, keep it all simple, keep it all the same right now, nothing much to really change. We're going to keep it all very, very much similar to what we said yesterday. Stay calm, stay patient, stay relaxed, and stay objective. We'll see you guys tomorrow. So we're going to quickly have a discussion about Bitget. Now, if you follow the channel, if you're on our Telegram, if you're on our Twitter, if you like the content, enjoy the videos, and just find what we do informative and beneficial, go ahead and support the channel by clicking the sign up link to Bitget and trade where I trade. Now, there's about 10 different good reasons why I'm suggesting Bitget, and obviously I've made the swap from Binance to Bitget close to a year ago now. Last year in September, I decided to go to Bitget and trade on Bitget, and I'm going to go through the reasons why you should actually come over and trade on Bitget too. So first and foremost, guys, if you like spot trading, obviously 0% trading fees on spot. They've got over 260 coins here. Basically every popular coin you can think of is on Bitget. Basically all the coins on Binance you can find on Bitget. Another really good thing is it is global access, meaning there's no global restriction on who can sign up. Doesn't matter what country you're in, where you're from, you can sign up to Bitget. And the reason they can do that is because they do no KYC. KYCing on this exchange is completely optional. If you want to trade on a decentralized exchange where you don't have to sign up, you don't have to have your government information in there, this is where you want to be, completely decentralized. Another really good thing is they obviously have very low trading fees for futures. It's around 0.02%. Now they have around 60 to 70 different trading pairs on futures and are adding more every couple of weeks, so it is steadily growing. They also have a security fund, so if the exchange ever gets hacked or you get hacked, you can actually request a refund or a compensation from the exchange. They have, I think it's like $80 million, or if not more, $800 million or something close to that in the security fund that actually pay out to their users if anything catastrophic happens. So obviously signing up the link, you'll get access to all of that, but there's a few beneficial and extra things you get access to if you sign up the link down below. You'll get access to the reward center. Now on the reward center is about 5 separate tasks, and they're trading tasks. If you complete those tasks, you can make up to $4,163 US just from actually trading. And the second thing is, if you sign up with the partner link down below, you are actually registered underneath my partner account. And what that gives me availability to do is I can actually adjust your fee kickbacks depending on your trading volume. So you actually get paid to trade on Bitget. You'll get kickbacks based on the trading fees you use. For example, on the 3rd of October to the 10th of October, we are doing a running campaign where 10% of the fees you pay on Bitget, you actually receive as compensation as USDT directly to your account. These are some of the things I can do. I can assess your trades, I can monitor your trades if you need advice, I can actually see what is going on, and obviously the fees are very, very small on Bitget. That being said, guys, that is all I want to talk about Bitget. If you want a more in-depth analysis and video about Bitget or how to leverage trade, go to our channel and click the video how to trade on leverage, and we talk you through Bitget and a little bit more. Thanks up, guys. We'll see you later. Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.